Hey, Brian Gatz here with Fairway. Hope you are having a great election day. Matter of fact, happy election day. That's right. You have the right to vote. Exercise that right. That's my public service announcement for the day. Truly and honestly, I hope you got out there and made a difference or tried to make a difference, right? So every vote counts. And hopefully you did that earlier or you're going to be doing it later. But again, hopefully you had a great day and got out there and made a difference. So we're going to jump right into your Tuesday tidbit and lead it off with a quick market update because man, we have a big solution. I'm going to review that solution with you for what we're looking at on the home buying side for sellers, realtors, and buyers alike. So the market right now, Fed Chairman Powell came out and said, yep, you know what? We adjusted 75 basis points and we're not going to close the door on making another adjustment upward in the near future. So now there's an expectation of not only in December 15th, of the Fed Chairman increasing, but maybe after that as well. So in December, they're expecting about a 50-point hike, maybe 75. But again, globally, people were hoping for a pause. Here in the US, we were hoping for a pause. It's a lag indicator, right? It's a lagging item, meaning when we make these adjustments, we got to give the economy and everything around and associated with it a chance to adjust, right? And we haven't done that. We've been adjusting rather quickly. So we shall see, but there's some news on the horizon. A lot of the experts are thinking that inflation is peaking. Right now, as we're sending this out to you, there are some experts that are saying, hey, we think we might be peaking on inflation. Well, guess what? The gang at MBS Highway's been calling for this for quite some time. They said we hit November, we hit December, we're probably going to see these numbers kind of peak and flatten out. Thursday, there's an expectation when CPI comes out, which is the big number for the Fed, that we could see the first decrease in inflation. That's a great thing, maybe 8.2 to 8%. That's nice. That's really nice because right now rates are near 8%. 30-year fixed interest rates are near 8%. Okay. So the market was off by about 62 to 65 basis points. It was worse last week, the week before. I mean, as you know, the trend continues, right? So we're not trending the right direction. So this be some welcome news indeed. But how do we get around this? What's the solution now, right? We keep saying it's a good time to buy, and it is, right? Competition is down. Prices have kind of flattened out. We're seeing some price reductions, or they're coming in at about 98% of what's being asked. Again, those are national numbers sometimes too, but it's a good time. Remember this phrase, marry the house, date the rate. Well, if the expectation that we've laid out in front of you is that we're going to start to see inflationary numbers peak, and first and second quarter of next year, we're going to see numbers as far as interest rates come down a little bit, and by the end of the year, come down to the mid to low fives. Now, that's not my prediction, right? That's all the experts that are out there that deal with mortgage rates, right? Not just the economy, but mortgage rates and how everything affects them. Right now, National Association of Realtors, Fannie, Freddie, the Mortgage Bankers Association, everybody's predicting, as I've said before, to be still in that mid to low 5 range by the end of 2023. Okay. So what do we do in the meantime? How do we fix this problem for everybody involved? It's a good time to buy, but rates are high. That's really the biggest headwind we have. Well, here's the solution. I'm going to give you a quick screen share here, and we're going to look at something here. Okay, so let's assume a 95% loan to value for a buyer, so around 316,000, maybe even a little bit higher. Let's maybe call it 320. I'm going to come back to that and tell you why. Loan amount of around 300,000, 30-year fixed rate, and a 2-1 buy down. It's kind of hard to see, but if you see that, it's a 2-1 buy down. Okay, I'm going to focus on that for just a minute. So you notice that the rate is 7.99. Listen, gang, I'm not far off here on rates. Okay, no, he's with no points. 5% down, good credit, everything else, right? So we can quote this out, give you an APR, all that fun stuff. But let's just use this for conversation piece. The 2 years, okay, so the first year is going to be 5.99, so 2% below in that first year. So 7.99, we're going to drop it 2% below, 5.99 for the first 12 months, okay? Second year, 6.99. Third year, we're back up to the note rate of 7.99 for the remaining course of the life of the loan, okay? So remember that for just a moment. Okay, 320 purchase price, $300,000 loan amount, look at the amount of money. If we do a 2-1 buy down, not paying points, right? This is not paying points. We don't want you to pay points, because if you pay points, you're going to go from 7.99 down to 7.75. Okay, what's that going to save you? Maybe it saves you $60. Okay, we're not talking $60. We're talking $402, right? Big difference. Use the money wisely. And also, if you pay points now and you refinance in the next 12, 18, 24 months, it's a waste of money. You haven't broken even, right? You're not going to recoup a huge amount of money. 1 point is 1%, is $3,000. How long is it going to take you to break even on that $3,000 if you're saving $60 a month, right? It's not worth doing it. I don't recommend it. But again, sticking with a $320,000 or $316,000 purchase price, $300,000 loan amount, $72,093. You can have the seller pay up to 3% on a 5% down conventional deal. The max contribution from the seller is 3%. Well, 3% of 300,000, because it's based off the loan amount, is $9,000. Well, $72,93 pays the difference between what the payment would be for the first year and also the second year. So it's basically set into an escrow account and subsidized with that money that's set aside. Okay. So the buyer saves in the first year per month $402.48 every month. Okay. I say save, right? But it's less they have to spend, but it's been subsidized with that $72.93 that came from the seller, which in essence, if they're 316 or maybe 320, they didn't have to drop, the seller didn't have to drop the price to move the house or sell it. Maybe they're at 320, right? Maybe they went up just a little bit from 316 to 320 to pay this. Okay. So they netted more money on the sale, or at least came out where they wanted to come out. Okay. You helped the buyer get a reduction in their monthly amount of 402 at an interest rate of 5.99. Okay. Real estate agents happy. Buyers happy. They got a house, lower rate for the first year, second year. If you recall what I said, we're expecting rates to drop in the next 12 months. Maybe it's a little bit longer. Okay. If we're off, maybe it's 16 or 18. Okay. With the first year at 5.99, they save 402, or it's $402 less. And the second year is still $205.31 less. Okay. Now we turn around and refinance. And by the way, if you're a client of ours, we are paying all of our closing costs, over $1,500, that we'll pay on your behalf when you come back to us. So if we can get you into a house now, again, remember, marry the house, date the rate. If we can get you into the house now, less competition, get you a lower payment, and then refinance you into a good fixed 30-year or 15-year, whatever it might be, now's the time to do it. Now is the time to do it. Seller makes their money, at least made whole, if not maybe increase that price to make a little bit more, right? But you're still around current market. The buyer gets in and has a lower monthly payment for the first 12 to 24 months. And by the way, here's the other asterisk. If you want to do a 3-2-1, buy it down and get into maybe the 4s, we can do that as well. Now it's going to cost more money if you look at the subsidy, right? It's going to be more, right? Because we got to pay a little bit more money for that. But again, the seller wins because they're selling and making their money. Realtor gets a transaction out of that. The buyer gets the house of their dreams. They move into it and they got a lower payment, right? Everybody wins. Yes, we get a transaction out of it too. But my point in this is it's a great time to buy. The only reason it's not is because of the rates. Well, guess what? We just solved the problem right here. Do a 2-1 or a 3-2-1 buy down. Give us a call. Reach out to us today. Let's get them out there looking. At this time, you know, the market slows down. Let's go find those that want to buy a house that have been sitting on the sidelines. Let's get this in front of them. If you're a seller, I want to talk to you. If you're a realtor, I want to talk to you. If you're a buyer, I want to talk to you. We on the Gatz-Knight team want to talk to you. Okay, give us a jingle. 317-731-4760, or reach out to us at Gatz-Knight-team@fairwaymc.com. Listen, we look forward to helping you. We're here and we want to make sure that everybody gets what they need in this market. We have the magic pill, quote unquote. We've got the solution. Reach out to us. Hope you have a great week, and hopefully we'll talk to you soon. Take care. Bye-bye.